Hello, this is Martin here from seekedge, channel for learning about trading and investment. Welcome to another episode of the Markets Tomorrow, the daily market technical analysis show. Well, we are going to analyze what happened in the market today and see how we can plan for the next day. And we would be doing this analysis for July 29th, Thursday, and expiry of 2021. It's a monthly expiry. So as usual, we would be analyzing it based on the following parameters that's listed there on the left side, which would be looking at the charts, and also additional things that's listed on the right side, which would be based on the open interest data, the volatility, the global markets, right, the commodities market, the different sectors performance, and the foreign institutional data, and we'll wrap up and come out with some actionables, right? So that's the structure of the show. So as usual, we'll get directly into the charts for Nifty. So Nifty 50 index charts, look at what it shows. It is such a large wick, shows the bounce or the bullishness, that moved the market up after a big fall, forming nothing but a hammer, right? A hammer or a downtrend. Could be a reversal, right? Could be reversal in the sense you can see other hammers that happened. You can see that on July 2nd a hammer happened which bounced it with a gap up. Here we have another hammer which also caused the market to move up. Here we have another market which is slow. There was another gap up. So hammers generally gives bullishness or a reversal of the trend. Not necessary, but this wick is clear indication that there is a lot of bulls out there. Let's look at BANKNIFTY. This is also forming a hammer, but it's not. It's a little lengthier hammer. Hammer should be ideally half of this, right? But still, you can say that it's a hammer because there's no wick on top, right? So that again indicates the same. It could be so here also the same thing happened. There is a bullish. The wick is large, which indicates that there are bulls in the market which is pushing the market upwards, right, after the big fall that happened, right? So what exactly happened today? We go to the lower time frame and then we'll see what happened. Such a clear downtrend day, right? So look at what happened here in 15 minutes chart. If you see, it starts here with a open is equal to high, which is a bearish pattern, 15 minutes candle, and then clear downtrend till the afternoon, around 11 o'clock, right? That is when it forms some kind of a reversal pattern, right, with the red, and it's a star pattern, tri-star pattern, which is indicating a reversal, and at 11 o'clock it started trending upwards and regained almost all of it, right? So it is a down, it's a V-shaped day, you can say, right? So that is what happened in the market. So if you look at the total, this is interesting because from the morning, if you see, it had fallen down 250 points, and then what happened? So that is the kind of market action nowadays that is happening, right? So you can see that after falling that much, it went upwards 200 points, almost all of it. 250 points fall, 210 points up. That's the kind of moment that BANKNIFTY, what happened? Same. It had a V-shaped recovery today also. So how much point was that fall? That fall is around 700 points. 700 point fall, and then the recovery was not that much great, but half of it is done. Around 450, 460 points regained. 700, 460, and Nifty it's like 250, 210. V-shaped movement is what happened in BANKNIFTY, right? So let's get into the Nifty charts and see where are the supports. So we are talking about the continuous zigzagging that is happening since last 1 month, right? This is nothing but that's exactly what happened. The zigzagging continued today downwards, Now where are we? We are at a support zone, right, which is nothing but 15600, and today it went till 15500, right, but it bounced back. So we are still very much within that zone, you can say. It still has not breached this 15450. That will be the neckline for an M pattern, and any breach of that may be bearishness, although we have some support down there, right. Anything below this point, right, which is the last swing low, would be bearish. So the consolidation continues, you can see. Look at the Bollinger Bands, you can see that we're still consolidating. We just slipped and then bounced back into the bands, Bollinger Bands. Here also we are still in the very much within the consolidation range. We are not spilled out from the Bollinger Bands yet, right. Here also, if you look at, you can see that the support resistances, if you see, what has happened today is it had simply slipped, uh, breached the support slightly, but never breached the M pattern neckline point of 33,900 yet, but came close to that till 34,000. It came close by and then bounced back and is hanging on the channel, the trend line channel, right. So it's still, you can say, it is a support zone of 34,700 and 34,300. That support zone, it has taken the support, you can say. Now whether it will bounce back upwards, right, we don't know. It's only indication that we have is that it is a the market record, and it is a hammer pattern, and it could continue the reversal of the trend. So probably the max zigzagging or the consolidation may continue, we don't know, or we may breach it. But any point we go down below 36,000, the neckline of an M pattern, right, this is something that we have to be cautious about, right. So we have a M pattern that's forming here, right. So this M pattern has this neckline of 33,900. Anything breach of that could be double of this, could take the market down to 32,000, 32,500, that kind of levels. So this is something positional players has to keep a watch on, right. Similarly, the Bank Nifty also the same. If you breach this, right, here you have an M pattern, the larger M pattern, right. So that is the support and the resistances and Bollinger Bands we have seen in momentum. And how did momentum do? So if you see the Bank Nifty, the momentum is still in the sideways and falling down, fallen down. Nifty also is in the sideways and is fallen down. What about the trend? The ADX trend indicator has the bearishness that is shooted up. The strength is not big, it is only 17, right. Strength of that move is not great, but the trend is clearly bearish. Bank Nifty also, trend is clearly bearish, but bearishness strength is more, it's near to 25, but that's not also reasonable strength, right. So both the trend indicators for both indexes are saying it is bearish, and momentum indicators are saying it is sideways for both. That's about the chart study. Let's get into the open interest analysis for the futures and see what happened today. So today is the 28th. It is showing that this is a short build-up that happened in Bank Nifty for sure, and the futures data also, open interest data also shows that it is a short build-up on the Bank Nifty also. Options open interest data for the monthly expiry that is going to happen tomorrow, 29 July, is saying that we are at 15,700 is at reward. So the highest call rating is at 15,800, the highest put rating is 15,500. So whether we would attempt the 15,800 resistance, whether we will hold the 15,700 current zone, or will we split back to the support zone of 15,600 or 500, we don't know. But highest put rating is 15,500, right. So the PCR is 0.74, which is gone to the near to the bearishness, right? And Bank Nifty also, it is 0.66 further bearish. Put call ratio is indicating bearishness for Nifty and the Bank Nifty. The next expiry, that is tomorrow, and the Bank Nifty highest call rating continues to be at 35,000, and we are at 34,500. So the second highest call rating is there. The highest put rating, the support is seen as 34,000 and 34,500 after that, right? So the max pain area is 34,500, and for Nifty, what indicates, but this keeps on moving, but indicates 15,700, right? As of now, rest we will see in the market tomorrow, right? So that's about now. Another major thing that happened today is VIX. So the VIX shot up, right? The VIX shot up. What was the VIX price movement that happened? The range, if you see, VIX shot up, 40%, near to 40% of movement happened today. So such a big move was, so whenever the market falls, the VIX. So this was the kind of movement that happened in the market today, right? From 11 o'clock, right? The first half, the VIX shot up like anything to almost 16 levels, and then it fall down and settled at 13.7, right? So the VIX, as long as it's not falling down again, the VIX there is a shift in the VIX range now, right? So I just so although this VIX is not tradable thing, I just put some fib retracement to see. So we have so it looks like the VIX has shifted and is trending upwards. Now we may go upwards. Looks like, we don't know. So because VIX range was consolidating in this period for a long time, almost the full July month it was consolidating, I think, in this between the 13 and 10 and 11 range. Now finally it attempted 3 times to move up to 13, 14 levels, and finally today it shot up. So that means if this continues, it may further move. So VIX had a big spike that happened when the market fall down 250 points in the morning, right? Right. But, so even when it recovered, there also the VIX settled, at a higher level comparatively. So that's the VIX and the FI data. If you see, you can see that the foreign institutions have sold heavily today also. Right. It's 2,300 points of selling that happened today. So it's heavy. That's more than 18,500 crores of selling that has happened only in this month, July alone. Right. Domestic institutions, as usual, they had bought some nearly 920 crores. Right. Which kept the market to recover. Probably, that's what happened. Now let's look at the sectors. What was the sector action today? In the Nifty 50 sectors, if you see, you can see that metals and IT is only sectors that performed, right? FMCG also, consumer services. No, it's not FMCG, so consumer services is, that's, yeah, services, service industry. So all metal and IT, and the major sectors in metal and IT that performed, metal really performed, all others didn't perform. And in the IT, we can see that the performance just happened from tech, probably result related. Metals, well, all the metals performed. The SAIL and Tata Steel especially has performed very well, right? So let's look at the chart of the indices of the sectors and see what. So Nifty ID, as we know, it's bullish, right? What you see here is kind of a dragonfly doji indecisiveness, right? I think the sell-off happened in the IT also, and then it recovered, is what this long wick is showing. So it is clearly bullish in the momentum and trend perspective. There are price momentum divergences. It's there, something that we cautious about, but all is bullish. and today also it did fine. Metal index is in the bullish zone. It did a big move. It shows a bullish candle with a hammer, right? And it's at a point of breakout. Now, from tomorrow's price action, we would see this is kind of a rounding pattern, a W pattern, whatever you call it, right? If you are breaking out and we are closing a candle above that, that means metal is going to shine much better in the coming days or weeks. Now, auto, as we have seen, it's falling down like anything. It is bearish, right? Daily M pattern neckline is broken. Now, again, the weekly M pattern also may get hit, so it's heading south and bearish. Pharma yesterday had a big fall because of the divergence, and it further fall down today also. Okay, so pharma is clearly turned to bearish to join auto. FMCG is also kind of sideways consolidation. Momentum has slipped back into sideways zone, right? That's reality is also kind of correcting back to the support zone of the probably forming a cup and saucer kind of pattern or something. So this is going to take some time. It is consolidation or correction that is happening right now. So, but otherwise it still continues to be bullish. So Nifty, IT, metal, and reality are bullish sectors. If you see, now let's look at USD INR. Let's see what action is happening there. USD INR attempted to move up, kind of dragonfly doji pattern, which is indecisive. But it is very much within the channel that we are drawn. It is on the uptrend to hit the channel top probably. And dollar index has actually strengthened, close green, dollar is strengthening. And Brent, we can see that the oil is kind of consolidating, but is still continues to be at a higher level and not dropping at all. Gold have a small body doji candle indecisiveness. It is consolidating at a major support zone and probably heading upwards towards the channel top, right? Global market at the time of this recording is green, right? Nasdaq is 110 points up, right? Dow Jones is flat, and S&P 500 is also showing green. Europe markets also showing green. Shanghai, Asian market also showing. So overall, nothing. US market is showing green, right? Other global markets are also, and Asian markets also green as of now. The rest of the market movements globally we'll have to check prior to the market next day to get a complete picture. So that's a summary. To wrap it up, it was a big fall day and a big recovery day. It was a V-shaped recovery after a big fall. But good thing it went and halted at the same support zones that we had already and then bounced back. So probably it may continue the consolidation movement once again is all that you can hope for. It may be another attempt to on the upper side this time, right? So yeah, so the sectors that are good, IT sector is doing good because dollar is strong and metal is shining, right? So Tata Steel and SAIL are all good, very good picks to look for opportunities for the coming days, right? And positional players has to keep a strong watch on the neckline of the M pattern that I said at 450 on the Nifty and 33,900. Whether that is breaching, then probably it's time for a short. Until then, there is nothing to worry. Intraday, option derivatives have to play based on whether the market is, whether it is going above the previous day's close and able to sustain. So it has to be purely price action based. Volatility is spiking up, right? So the market, strict stop losses has to be there. These kind of V-shaped recoveries have become a routine nowadays. So anyway, the VIX not at the very bottom level is a good thing for option sellers at least, right? And the rest of that we can understand it from the next days, the following day after a big fall. right? That is what decides how the follow-up selling or follow-up buying, how is it playing around, can be seen tomorrow. I hope that this talk of 20 minutes would give you a understanding, a very good understanding on how what happened in the market, and also help you to plan your trades and your plan for trading for the next day. If you like it, hit the like button and share it to maximum, please, maximum people, so that we get subscriptions, which we really need to to keep us motivated, to keep making videos. I hope you would do that, and thank you for watching. Have a happy learning and happy trading.